market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here at the UBS European Conference in central London. We have a lot of news. These are your top stories. Treasury yields and the dollar strengthen on concern over tariffs from U.S. President-elect Donald Trump. We discuss what it means for the Fed with Kim Crawford from JPMorgan Asset Management. Now, two China hawks are expected to join Trump's cabinet. Florida Senator Marco Rubio is understood to be favorite for Secretary of State. Florida Congressman Mike Waltz expected to become National Security Advisor, plus a breakthrough at the UN climate conference in Azerbaijan as negotiators agree on a global carbon market. We're live with the president of the World Bank, Ajay Banga. Now, also on the program, experts from the world of business, finance, politics, and academia are here at the UBS European Conference. We'll be joined shortly by the UBS Investment Bank Chief Strategist, Bhanu Baweja. But first, let's take a look at the European markets map. Now, there has been a bit of a reversal in terms of what we saw. Stocks actually pausing their advance on Tuesday amid signs that the rally had left valuations now overextended, overstretched, as investors weighing the potential policy impact of Donald Trump's cabinet picks. So we're also hearing from German lawmakers said to be nearing a deal for early elections in February. Let's go cross-asset, because the most important thing is what happens not only to the 10-year, a lot of speculation actually how Bitcoin can go. I know Bitcoin currently at 89,000. The Hang Seng, one of the indices that has been pulling back the most on the back of concerns about Trump tariffs. You can see the Hang Seng down 2.8% and S&P futures practically flat. Now, U.S. Treasuries continue to face pressure as investors look to rekindle the sell-off spurred by Donald Trump's victory last week. The dollar, however, touched the highest level in more than a year, with traders now positioning for U.S. inflation data this week. Let's bring in Kim Crawford, Global Rates Portfolio Manager at JPMorgan Asset Management. Kim, as always, thank you so much for joining us. I'm sorry I'm not too far, but I can't be in the studio today. Kim, when you look at
it's really strange having you here.
Traders are now worried about. I know it's strange being so far apart. When you look at inflation, do you worry that this upends everything if we have tariffs across the world?
Well, I think for us, just near term, it doesn't change what the Fed is probably going to do in December. Activity data has been strong in the U.S., but at the same time, the labor markets continue to weaken. Wage growth is still moderating, and the Fed still thinks they're in restrictive territory. And for now, inflation is still near the Fed's target. So for us, the base case is still that the Fed goes in December. But, of course, the confidence bands around 2025 outcomes have certainly widened. On the one side, the Fed will still think that they're still in pretty restrictive territory. Even after a cut in December, the Fed's rate will still be about 150 basis points above at least what the old neutral was in their dot plot. At the same time, policies from the new Trump administration could take some time to actually hit fundamental data, given the backward nature of a lot of the meaningful stimulus. But on the flip side, it's still a big question mark as well. Can this really lift sentiment more immediately, with the prospect of tax cuts, prospects of more deregulation? So I think the confidence bands have certainly widened for 2025.
So, Kim, how do you play bonds, compared to some of the currency trades? It seems that, asset classes are reacting in quite different ways.
Yeah, I think, even though a Republican seat was going to be probably the most negative scenario for bonds, so higher yields, we saw a small rally after the elections. I think that was due to money being on the sidelines for quite a while ahead of the election uncertainty. We've certainly seen client inflows across our platform post the elections. However, there's still a lot of uncertainty. I think exactly what policies are going to come in will matter, their timing, and also their sequencing. So for us, if I look at my overall opportunity set, which is global government bonds in the developed market space, I think it's clearer that value has probably been created in Europe for now.
So, Kim, where do you see value in Europe? Again, there's a lot of political turmoil, be it Germany, be it probably France. Is it country-specific where you see value, or is it just because of valuations?
Yeah, I think a question we get asked a lot now is, all this fiscal noise out of Germany with the elections being brought forward, does that change your view on whether how Europe is going to perform despite trade uncertainty? So I think even though it's going to take a while to find out exactly what tariffs we get, whether it's across the board or whether it's more targeted tariffs, I think that trade uncertainty is going to weigh on European growth, which already isn't at a strong point right now compared to the US. The early elections in Germany, that brings forward the risk of more expansionary fiscal policy there. But I think that's still going to take time. From what we know about the Conservatives as well, they will probably be more restricted in what additional fiscal easing they want. At the same time, they are going to have to give some concessions to future coalition partners. But overall, I think you get some fiscal offset, but only partial. And I think the timing will matter as well, which is why we think, the ECB is going to have to lean more dovirishly for now. I think the market's also pricing in your trough in the ECB policy rate at about 1.85%. But even the hawks on the committee are talking about that rate probably being at 2%. So I think there is scope for the market to price either the ECB moving faster at some point next year or to eventually a lower rate as well. So value probably in German government bonds or European swaps in general.
Kim, what's your take on, we had a big budget, of course, in the UK. This is all upended because of possible tariffs from the US. But do you worry about, this national insurance contribution from employers and what that means for wage dynamics?
Yeah, I think this is the most important question now that the market has absorbed most of the budget news. The Bank of England told us that their view is that it is going to be inflationary and rates will probably have to stay higher for longer than they had previously expected. But I think now whether the Bank of England is going to be able to speed up any pace of easing is, like you said, going to be very centered around this question. Is this rise in national insurance contributions from employers and the new target bands, is that going to actually influence the labour market? And what we're hearing from businesses so far, at least, is that they are leaning towards cutting employment growth rather than being able to pass those higher costs on to final prices. So we're definitely going to be watching data like vacancies, employment PMIs to see whether you get a more aggressive weakening in the employment market that offsets some of the growth news from the budget.
Kim, thank you so much for joining us. Kim Crawford, their global rates portfolio manager at JPMorgan Asset Management. Now, coming up, we'll have plenty more from, of course, the UBS European conference. Treasuries under pressure as bond investors remain pretty cautious on Donald Trump's plans. We'll discuss all of that, the U.S. economy, and much more with Bhanu Baweja of UBS. That's next, and this is Bloomberg.
Economic fragmentation and higher tariffs, protectionism is by definition inflationary. It would be probably more inflationary in the United States, combined with expansionary fiscal policy supported by tax breaks. But it would have a detrimental effect on the whole world economy, including Europe.
Well, that was the Finnish central bank governor, Olli Rehn, speaking about the effects of tariffs on the global economy. I'm very pleased now to be joined by Bhanu Baweja, chief strategist at UBS. Bhanu, I'm so happy to speak to you. There's so much that we don't understand, that we don't know, and that markets are trying to figure out. How do you think, Donald Trump in the White House the second time around will be different from the first time around?
In many ways, Francine, the starting points of the economy are completely different to what they were in 2016, right? In 2016, the U.S. was early cycle. And right now, it's pretty clear that it's late cycle. You look at the unemployment gap, how far unemployment is from Nauru. That's one of the big differences, which means that you give it much more fiscal stimulus, and the risk of inflation is that much higher. The second difference is just the public debt situation in the U.S., right? I mean, your public debt has gone up by about 25 percentage points since 2016, and the willingness and ability of the rest of the world to buy bonds in the U.S. has diminished, right? So term premium in the U.S. economy, term premium in the U.S. curve could be higher, which means that even if the Fed is cutting rates aggressively and the front-end rates come lower, long-end rates may not budge. I mean, this is almost the exact opposite of Greenspan's conundrum of 2005. And he was worried about why long-end rates were not rising when the Fed was rising. Now the long-end rates may not come down as the Fed comes down. So the cost of capital, and I don't think the equity market's paying attention to this, but the cost of capital may not come down as much as the Fed cuts. The third, and perhaps the most important difference, is that risk premia are in a completely different place. I'll just give you one example. High-yield credit spreads on the day Trump was elected in 2016 were roughly 550 basis points. Today, they're 270 basis points, so literally half. And the gains in financial markets, gains in equities are made when risk premia contract, when credit spreads contract, valuations rise. That's already happened, so there's very little room for risk premia to contract. And the Trump that we get could be very different from the Trump. Remember, in 2016, he wasn't expected to win, so taxes being cut lower was a very big surprise. At this minute, the market's already pricing in lower taxes, at least 19%, so 21% in the markets. But tariffs, I'm not sure that's being priced.
So, Bhanu, are you expecting it to be almost range-bound? Or actually, do equities go down when they realize some of the damage that could happen from inflation or even lower growth?
I think growth-inflation mix could be a big challenge under this administration. So after this initial bout of euphoria, which I don't think is over as yet, by the way, I mean, you will see the NFIB survey, the sort of the small business owners survey rise aggressively, and that should mean small caps do well. That should mean that the breadth of the market could increase. But I have no doubt that I think we will go through an air pocket in the market through the first half of next year, both because the policies, the tariff policies will become obvious, the immigration policies, and that's something that I don't think we're speaking enough about. I mean, how lack of immigration, let alone deporting, lack of immigration, how that impacts the growth inflation mix. So I think there will be an air pocket in the first half, and the market really has to reconcile not just with the good Trump policies, deregulation, lower taxes, but also what lower immigration means, what higher tariffs mean. That plus the fact that organically, even if we sort of don't look at the world from a political lens, not from a Trump or Harris lens, but just from an organic, where are we in the cycle, the U.S. consumer has been super normal for 6 quarters and should slow down.
But you were one of the first ones, actually one of the only ones that's always looked at immigration as, one of the strengths of the economy, and there was a direct correlation. Now you sent me papers on this. Are you more worried about, Donald Trump in the White House cutting down immigration and therefore putting the recovery or the strength of the U.S. economy at risk than you are tariffs impacting the rest of the world?
Very much so, very much so. So I think, tariffs will impact the rest of the world. I'm not saying tariffs are irrelevant. They are very consequential. At a time when global trade is very weak, it really does matter. But again, if you look at what has helped the U.S. economy do as well as it has done over the last 6 to 8 quarters, I don't believe it is a surge of productivity. I mean, this is a debate you and I have had for some time. I don't believe it is a surge of productivity. That can happen in the future. I'm open-minded to that. But really what's happened is more old-school factors like fiscal help and immigration. And both of these, it's not clear that both of these will continue. I mean, even with Trump's fiscal, when the marginal propensity to spend for some of the places where he's cutting taxes is actually very low. So the growth impact of that is actually going to be de minimis. So the actual fiscal impulse is not going to be that strong. Plus, if you get much lower immigration, that's growth negative and inflation positive.
Bhanu, what do you expect the dollar to do in all of this? And actually, has there been, Donald Trump has said he wants a weaker dollar.
Yes, but ironically, most of his policies point in the opposite direction, as you know. So in my mind, one variable that drives the dollar more than anything, and of course there's a gazillion variables, but the variable that really drives the dollar more than anything else is how the rest of the world does relative to the US. And if at a time when global trade is already very weak, you're imposing more protectionism, it's really hard to see how you get a major renaissance in growth in the rest of the world. Yes, you could see the European consumer rebounding from a bad level. Yes, you could see the Chinese consumer rebounding from a very, very poor level. But you're really not going to see a very big growth pickup. And in that world, the dollar remains quite likely strong, especially against emerging market currencies. Now, I don't believe that the Fed is going to be hiking aggressively because of tariff inflation. And I think the Fed will probably look through that. And as a result of that, front-end rates will probably come lower. That will matter for things like gold, which we're positive on. That will matter in the longer term for things like the yen, which if we get to 160, I think we should be positive on, but not EM currencies.
I mean, gold is also a funny one because it almost seems like almost taking over some of the reserves. So I don't know whether there's going to be less dependence on U.S. dollar because, certain central banks will say, actually, I'd rather hold gold.
So that is actually already happening, Francine. I think life for gold changed the day the Central Bank of Russia was sanctioned. right? At that point, most central bankers and asset managers sat around the table and asked themselves, what is money, right? What is money? If treasuries are not, if gilts are not, if bonds are not, then what is money? Of course, you can't allocate your entire portfolio to gold, but most of these are allocating more. But it's not just central banks buying, it's not just asset managers buying, it's also retail. China has about $42 trillion in M2, and all of that is within that system, of course, because it's a closed capital account. Now you're not going from your fourth house to your fifth house to your sixth house, because of course houses are for living, and so you are allocating, Chinese retailers are also allocating more to gold. So gold's relationship with real interest rates has become completely and utterly asymmetric. Gold does react when real interest rates come down, but has not been reacting when real interest rates go up.
But are you expecting Donald Trump to go after the Fed, the independence of the Fed, if dollar doesn't move the way he wants it to, or even if the economy doesn't behave how he's expecting it to?
I think, so in the near term, which is, let's call it the next 12 months, I think the Fed and Donald Trump will want the same thing, which is lower rates. Right? I mean, the Fed has signaled, why did it start with 50 basis points? It has signaled that it really has broken the back of inflation, and now it'll once again start looking at monetary policy rules like Taylor rules and take interest rates, just based on where inflation is, take them back to neutral. The Fed is not going to preempt the impact of tariffs, remember that. So I think the Fed and Donald Trump will want the same thing. I think the debate is going to heat up when we sort of see the bottom of the cycle, which could be 12 months away, and then the Fed needs to start hiking rates once again. That's when I think the pressure. So will he want to interfere with the Fed? Absolutely. There's no doubt about that, right? I mean, his entire business model is, he said it quite explicitly, his entire business model is cheap money. I mean, that's one of the ways he wants the world to be able to do business with, low cost of capital. Will he be able to intervene with the Fed? I think that's unlikely, right? Because there are very few governors whose terms are coming over. I think 2 governors till 2028, Powell in 2026. So it's not clear that he will be able to compromise the independence of the Fed. If I'm wrong on that, and he does compromise the independence of the Fed, that changes everything. That changes the call on the U.S. economy, that changes the call on the U.S. curve, that changes the call on the dollar. I think the probability of that event, thankfully, is very, very de minimis. It's very low. But the negative payoff from that is so high, I don't think any financial market asset is anywhere close to pricing it.
Bhanu, thank you so much, as always, for joining us. That was Bhanu Baweja, Chief Strategist at UBS. Coming up, U.S. President-elect Donald Trump's cabinet takes shape. We tell you who's in and what it signals about his administration's policies next. This is Bloomberg.
I think we in Europe and the rest of the world needs to understand that Donald Trump is very serious about getting a peace deal sooner rather than later. I have myself said that there's a window of opportunity for these negotiations between the election and the inauguration day. Let's see what happens.
Well, that was Finland's President Alexander Stubb. Now, Donald Trump's new cabinet is also beginning to take shape with more high-profile appointments. Let's get more from Bloomberg's EMEA News Director, Ross Matheson. Ross, thank you for joining us, as always. So what do the new appointments, loyalists, what do they mean for China-U.S. relations?
Well, it's interesting to see the combination of Marco Rubio and Mike Waltz. You've got 2 US officials coming in to the new administration, most likely with senior roles advising on foreign policy, and they're both very much China hawks. In fact, Mike Waltz, who's currently a congressman, has described China as the biggest threat of all for the US, the singular most important foreign policy focus for the US. So if we need any reminder that we're going to see potentially higher tariffs on China, an even more tense economic and trade relationship, but also from Marco Rubio perhaps pushing hard on the human rights issues with China. And that's something that China is going to focus on very, very closely. They prefer to separate those things out. They don't want trade and human rights to bleed in together. So are we going to see the US pushing not just on the economic and trade front, but twinning that again further when it comes to human rights? And of course, the slight wrinkle in all of this is that Marco Rubio has been sanctioned by China. So how do they circumvent that in terms of potential visits to China and communications between senior officials?
So, Roz, what kind of impact does it have on the Middle East?
Well, obviously, also there, you've also got Marco Rubio again, but you've got others coming into the administration. Elise Stefanik, obviously, as the US ambassador to the UN, and others who've been, very, very strong in their support for Israel when it comes to the conflict in the Middle East, and in fact, criticising the current administration, saying they're not being overt enough in their support for Israel. In fact, Marco Rubio has also said previously that Israel should be able to respond disproportionately against Iran for some of the tit-for-tat that we've seen go on between Iran and Israel. So obviously they're opening the door perhaps for Israel to more directly engage against Iran. And that's something that obviously Benjamin Netanyahu has indicated he's willing to do. So you could see more direct tensions between Israel and Iran under the US umbrella.
Roz, as always, thanks so much. Bloomberg's EMEA News Director, Roz Matheson. Coming up, we go to Baku, Azerbaijan. Climate negotiations underway as world leaders convene for day 2. We speak to Ajay Banga, president of the World Bank. That's next. This is Bloomberg. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua at the UBS European Conference, and these are your top stories. Treasury yields and the dollar strengthen on concerns over tariffs from U.S. President-elect Donald Trump. 2 China hawks are expected to join Trump's cabinet. Florida Senator Marco Rubio is understood to be favorite for Secretary of State. Florida Congressman Mike Waltz expected to become National Security Advisor. Plus a breakthrough at the UN Climate Conference in Azerbaijan as negotiators agree on a global carbon market. We're live shortly with the president of the World Bank, Ajay Banga. Now, oil gaining this morning, recovering from concerns over a soft demand outlook from China, a stronger U.S. dollar, and concerns that the market may flip to oversupply. The ExxonMobil chief executive officer, Darren Woods, told Jumana that oil prices are being affected by strong supply rather than demand.
Demand is at record highs, both for oil and for gasoline and diesel. And so the demand is out there today. The industry's been very effective at supplying that demand. I think that's what you're seeing. And fortunately for us, with some of the turmoil in the Middle East, that available supply has kept the markets fairly stable. And so it's less of a demand issue, and there's just a lot of supply.
Well, that's Darren Woods, chief executive of ExxonMobil. Now, day 1 of COP29 saw a breakthrough on climate negotiations, with world leaders agreeing on rules for United Nations-administered global carbon market. Well, joining us now from the summit in Baku is Jumana Bersace with a very important guest. Jumana, over to you.
Fran, good to see you. Thank you so much. Yeah, joining me right now is the World Bank President Ajay Banga on the sidelines of COP29. It's so good to be speaking with you.
Thank you.
This COP has been called the finance COP, and there's been a lot of conversations about financing and where the financing is going to come from. But I actually want to rewind back to COP28. Because you yourself set out some targets for the World Bank to achieve on different parts of the climate discussion,
right.
Be it methane, be it carbon markets, be it financing. Just give us an update on the progress.
Sure. So we talked at COP28 about setting aside 45% of our financing would go to climate, half to adaptation, half to mitigation. Really adaptation is schools and roads and heat-resistant varieties of seeds, basically development done right. And where we are now, fast forward a year, we're at 44%. So we plan to get to 45 by next year. So we're doing fine there. The second part we talked about was to do a great deal of work on methane. Methane is much more dangerous than carbon dioxide. We've actually signed up a number of countries for rice, 6 countries for rice farming. I had talked about that. About 10 to 12 countries for dairy and livestock and how to manage that. Another 5 or 6 countries for waste management. If we do what we're talking about with all of these, we could reduce 10 million tons of methane from the atmosphere over these projects. Third big one is climate resilient debt clauses. We'd already announced them when we were there. We've now just today announcing that not only will we cover hurricanes and earthquakes, but we'll also cover all other kinds of catastrophes, floods, droughts, and pandemics. And the last one, which we had announced, was forestry credits. And the good news there is we've got about 5 million we've already generated. and we're trying to get to more in the coming years. So work is progressing.
So work with World Bank is progressing, but if you look at it as an aggregate level, that there's a lot of dispiriting evidence coming through showing that we're nowhere near where we need to be.
Oh, yeah.
Can I just ask you whether you think the targets set back in 2015, the Paris Accord framework, are those targets still achievable to your mind?
I said this in a panel today, I don't look at it that way. The moment you start saying you need X trillion dollars, you said getting people their eyes glaze over. Much more important is to do what we are doing and push as hard as we can on the right things to do. It's not just about climate. It's about development. And even more importantly and more urgently, at the end of the day, is the issue of jobs for young people. There's, 1.2 billion young people who are going to come through the pipe in the global south in the coming few years, 10 to 15. Those same countries are currently on a pathway to generate 420 million jobs.
Yeah.
I think we really need to start focusing on how to do that. And so you'll see, I'm trying to move the World Bank to say, of course we do the pillars of development, education, skilling, and healthcare and climate. But actually what we're trying to do is to make sure we work with governments to enable the private sector to generate jobs. That's what I'm still focused on.
So you said about 40% of your financing is going towards climate. Is that number likely to change? Could it change with the return of President Trump, the U.S. being the largest stakeholder in the World Bank? Could it throw that target into question?
Just remember that what I'm doing with that money is actually doing the things that everybody wants to do, including him. At the end of the day, I'm trying to make sure you build schools that can resist a hurricane, roads that can survive a flood, heat-resistant varieties of seeds. Where do those seeds get developed and where does the IP come from? So the moment you start making this something more than it is, yes. But I'm not in the business of talking about whether we are doing only mitigation. Of course we do mitigation. For example, at COP28, I talked about 100 million people in Africa we would reach with power by 2030. I've upped that to 300 million with the African Development Bank. Some of that will be renewable energy and solar. Some will be fixing current transmission grids. What's wrong with that?
Well, I think there is a lot of concern here, even though President-elect Donald Trump is not actually physically present. There's concerns that the U.S. may cease to lead the way on some of these climate discussions
I think the way to think about this is he won an election, respect that vote, and let's start thinking about what he does as compared to what we all think he will do. That speculation isn't going to get us anywhere. Yeah. Let's watch his actions, watch his deeds, and work with him on explaining why these things are good for American business, for European businesses, and for everybody else. I think that's a far more constructive way of engaging with this administration.
Yeah, fair. Let's talk about financing. Trillions of dollars of needs are the numbers that are being put out. And again, one of the focuses of COP29 is to come to that new agreement on the money that flows from rich countries to developing countries. Right now, the annual target is 100 billion. Obviously, it has to be revised higher. How big of a role do you think multinational development banks are going to be playing in getting this financing?
I mean, we can't be the ones who source the trillions. We don't have it on our balance sheet. Yeah. Just to be clear, neither do governments. It has to be the private sector. I think our biggest role is in facilitating, aside from our own balance sheet, is in facilitating private sector investment. So I've talked about this private sector lab we set up, right, with Mark Carney and Shriti and a bunch of CEOs. We've got 5 things we're working on. That work has already begun. The first one is regulatory policy clarity. So with this 300 million people in Africa, in January, at the end of January in Tanzania, we're doing a summit with 15 heads of state. They're going to lay out what are they going to change for the private sector to feel better to put my money in this country than that country. First step. Second, they wanted clarity on sort of political risk guarantees. We've merged all our guarantees across the World Bank together. We've already doubled how much we're doing, and I've only been here 17 months. In the first quarter, we trebled. So we're headed in the right direction. The third one is, can the World Bank take the first loss in certain projects, junior equity? So we kind of get people over the edge on investing. We're creating the Frontier Opportunities Fund to help finance that. That should get launched somewhere over the next couple of months, funded by our own earnings as well as philanthropy. And then the fourth item is foreign exchange. And there, IFC has already reached now between 30 to 35% of its financing is local currency. So I'm trying to work local currency swaps with commercial banks. And then the last one, which is the most exciting, is to make an asset class out of these loans. That's going to require standardization of loans, creating a rating agency wrapper, and the like. What I've just done is signed up Doug Peterson, who's just retiring from Standard & Poor's. He's going to lead that for us. So I think we're making progress on all fronts.
Yeah. How successful do you think you will be at de-risking some of those public risks or risks that the public have around investing in these developing
Like I said, the guarantee platform is very helpful. They're already doing that. There are absolute numbers there. The foreign exchange risk is another an absolute one. IFC is now at 35% of its financing being local currency. And then the big piece is the regulatory policy. And that one we'll see now, and at the end of Jan, when we do this in Tanzania, you'll be able to see what we're doing there. And then the last one is that big asset class idea.
Yeah.
So one step at a time.
Yeah.
You know, people think that there's a silver bullet to be fired in all this. Don't think like that. Think about it as a series of things to be done with the private sector, which over time changes their thinking about this area. It's not that they don't want to invest. If there is a business reason to take their money to a country, they will. But they're not going to take it there just because somehow we think it's the right thing for them to do it. We've got to allow them to see the opportunity.
And create the right space for it. Ajay Banga, thank you so much. Always so good to talk to you. Ajay Banga, World Bank President. Francine, I will toss it back to you.
Jumana, thank you. Jumana Barsecha there with the World Bank president. Now, we have some breaking news. It came in the last couple of minutes. German lawmakers finally agreeing on a date. That federal election will be held on February 23. Now, for more, let's bring in Bloomberg's Oliver Crook in Berlin. So I guess, Olli, what happens now until the 23rd of February when we have a federal election in Germany?
Yeah, that's right. So there's a tug of war that was going on between Olaf Scholz, the chancellor, and Friedrich Merz, the head of the opposition party of the CDU, really trying to figure out on what date they would get this election. Scholz was pushing for March. We now have had an agreement between the two leaders and the stakeholders. We will have a federal election here in Germany on February the 23rd. That is more than 7 months ahead of time of what we were anticipating. If there was a regularly scheduled election at the end of next year, that all came early when Scholz pulled the plug on the government. What we get now is we have to have Olaf Scholz, the chancellor, come to the parliament, to the Bundestag. He needs to call a no confidence vote in himself, which is really just procedural at this point because he's expected to lose that. Then within 60 days, the election will be held. And that is exactly the process that we finally now have transparency that the Germans will be going to the poll on February 23rd of next year to elect a new government.
Olli, thanks so much. Oliver Crook there with the very latest, of course, also on what's at stake in Germany. Coming up, traders bet big on Bitcoin. Can crypto's rally actually last? We'll discuss that next. And this is Bloomberg.
Season is here.
This earnings season tells us there is more to life than mega caps.
Bloomberg is first to break the numbers.
Let's talk about Deutsche Bank here.
BASF with that big exposure.
We have numbers from Barclays, from Hermes, Anglo American.
We've got a lot of earnings to work our way through.
With the smartest insights.
I think the BBVA has posted really a very strong set of results today with that bottom line.
Somewhat cautious on Q3, but I think it's in a better place than it was.
Continuing coverage on Bloomberg.
The conversations that matter, the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. We're here at the UBS conference in central London. Now, Bitcoin surging past $89,000, lifting the total value of the crypto market above its pandemic-era peak. Now, this comes, of course, as buyers continue to bet on a boom under President-elect Donald Trump. So let's get more on all of this from Bloomberg's Valerie Teitel. Valerie, what's the limit here?
Look, there is a powerful force behind this rise in Bitcoin, Francine. Overnight, Bitcoin became the 8th most valuable asset in the world, overtaking the market cap of the world's total value of silver, and just behind Saudi Arabia's market cap. Saudi Aramco's market cap. Bitcoin has now risen nearly 30% since it became clear that Trump was due to win the election, and we have seen very strong inflows into those those newly created Bitcoin ETFs. There have been other Trump trades which have taken up steam, notably S&P futures and small caps in the U.S. This is on a weekly basis, have now risen over 7%. Those small caps hit a new high yesterday since 2021. All of this because we want to be exposed to this domestically driven growth that we can see coming out of the U.S. Kathy Woods commenting yesterday that the deregulation under this new Trump administration could unleash a powerful tailwind into the U.S. economy akin to the Reagan revolution. And we've seen a big inflow of ETFs, of U.S. exposed ETFs. Those investors want to be exposed to this U.S. growth story. A possible headwind for the equity market, Francine, could be a sustained rise in Treasury yields. Treasuries were on a holiday yesterday. They're back to trading today. We are seeing a big move when it comes to the front end, but it's not yet denting this risk appetite. We have heard, though, warnings from Rubini on the impact of bond vigilantes. They could come back. Take a listen.
He cares about market discipline. And if bond yields go higher and the stock market correct, that's a bond vigilantes in the market saying your policies are unsustainable. And if he chooses the right economic advisors, they're going to warn him against policies that eventually have such a market impact and may lead to policies that are more moderate.
Rubini there talking about the bond vigilantes still out there watching these stimulus plans, this fiscal spending promise under the new Trump administration. We've seen 10-year yields rise post-election, but they've not risen that much. We're now 9 basis points higher since Election Day.
Valerie, thanks so much. Valerie Teitel there on the very latest with Bitcoin. Now, Bloomberg has learned that Olaf Scholz's Social Democrats and opposition lawmakers reached an agreement, finally, to hold a federal election on February 23rd. Now, for more, let's bring in Bloomberg's Oliver Crick in Berlin. So, Oliver, tell us a little bit more about the timing. I know Olaf Scholz wanted to delay it, but actually the opposition has been trying to get it as soon as possible.
Yeah, Francine, it's been a huge debate. It's been the big back and forth for the last week, basically, between Friedrich Merz, the head of the CDU, and Olaf Scholz, the chancellor and head of the SPD, about when they should hold the election. They finally have struck an agreement. We have the federal election on February the 23rd. There were a lot of concerns. Merz was saying that basically Scholz was just trying to hang on to power for longer, trying to sort of gain political points going into the election. Olaf Scholz, for his part, was saying that basically, no, we need to be prepared to have this election. Francine, there was concerns there wouldn't be enough paper for the ballots to actually hold the voting. So this was going to be all the sort of things that were going to be discussed. But now it seems that they have been satisfied with the fact that Germany will, in fact, be prepared to hold this election and will head to the polls on February the 23rd.
So what are the polls actually saying?
Yeah, so you can just see them on the screen there. What we've seen, that was the first poll that we've actually seen since the vote was called. So this is sort of a meaningful change in some of the sort of allegiances that we saw. We basically saw all of the mainstream parties, as you can probably see there on the board, going up and gaining a little bit of points ever since the government collapsed. This means that basically a lot of German voters have moved away from some of the smaller parties in favor of some of the larger parties to potentially be able to gain some power in this next government. I will sort of say what is interesting is what we've seen here is obviously the CDU has been leading for a long time in the polls, Merkel's traditional party. What is interesting is you see there the AfD, the Alternative for Deutschland, the far-right group, which is basically heading into this federal election with the strongest support it has ever had in going into any election ever. It is at about 20%. That is just shy of the 22% high water mark that they have that they've enjoyed in the past. And really, if you look at the current coalition, SPD, the Greens, the FDP, they're all doing a lot poorly, much worse than they did going into 2021. So we're going to sort of look at some interesting calculus of who's going to be able to work together. The baseline sort of assumption right now, and again, this is still very early in this cycle, is you could potentially form a government between the CDU and the SPD grand coalition, which is what you had in the last term of Merkel when she was chancellor and Olaf Scholz back then was finance minister.
Olli, what are the key issues that people will actually vote on?
Yeah, I mean, the reason that this government collapsed was because of the disagreement of basically how to fix Germany's economic problems. And those economic problems we've been talking about for many, many months, if not for many, many years. There's questions about the sort of the future of industry, energy prices, and really the CDU is going to go with their sort of classical solution to problems, which is to cut taxes, to cut back the welfare state. Olaf Scholz is, again, very sort of opposed to that. Where I think, Francine, the debate will get interesting is around the debt brake. And the debt brake is the reason that basically the German German government collapse, because the Greens and Olaf Scholz said, unless we sort of start being more flexible about the amount of money that Germany can borrow in order to fix its considerable economic problems, there will be no progress, and this economy is in big trouble. The question will be now, the CDU, which has a self-proclaimed fetish for the debt brake and for zero debt, will they be able to, because of the urgency of the problems facing Germany, will they be able to get into a position where they are beginning to think about reforming the debt brake? That is going to be the key issue going into this election.
Olli, thanks so much. Oliver Crook there with the very latest on the German elections. Coming up, AstraZeneca rises its annual forecast, announces a plan to invest some $3.5 billion in the U.S. We'll have plenty more on that next, and this is Bloomberg. Well, AstraZeneca has raised its annual forecast and announced a plan to invest $3.5 billion in its U.S. business by 2026. Now, Bayer shares, meanwhile, plunging this morning after the German conglomerate cut its profit outlook for the year. We're joined by Sam Fazeli, Director of Research for Global Industries at Bloomberg Intelligence, with the very latest. Sam, always good to speak to you. So can you tell us a little bit more about AstraZeneca's third quarter beat?
Sure, good to see you too, Francine. Third quarter beat was a nice beat, solid beat, but what's more important is that they raised the full year guidance too. And pretty much the company is firing on all cylinders when it comes to the product performance and earnings and margins. So, you know, fundamental story remains solid and intact. But of course, that's dragged down a little bit by some other issues. A tiny issue today that we referred to, which is a pipeline, I would say setback. But also this China question that's been hanging around for now pretty much close to over 2 years.
So, Sam, on the China question, could China's investigation into AstraZeneca actually weigh on its share price?
Yeah, so it has weighed on the share price, but I want to do a tiny little correction there, Francine. They're not investigating AstraZeneca. They're investigating, and the company went to some meaningful lengths to try and say that in its press release right up front and also in the details. It's the individuals who work for AstraZeneca who are under investigation for practices. The company has not been notified of an investigation, and of course they've said in the press release that they will cooperate, which of course is the only thing they can do. So that's been going on, but a similar situation arose about 2 years ago when the company then, as a result, fired something around 100 individuals within the company in China to deal with it. But so this is not exactly new. It feels like a continuation of the same issue.
All right, Sam, thanks so much. Sam Fazeli there with the very latest, of course, on AstraZeneca, and we'll get to Bayer as well. Now, a reminder, Bloomberg has learned that Olaf Scholz's Social Democrats and opposition lawmakers have reached an agreement to hold an early federal election on February 23rd. So we'll have plenty more, of course, on that throughout the day to try and figure out what the polls say, what the big election campaign is and will be. Some saying that actually if Friedrich Merz were to be the Chancellor of Germany, has a more abrasive personality than Olaf Scholz, and some, of course, would say that could work quite a lot better with Donald Trump. I don't know whether that's true, but that's one of the line of questions that we'll try and get to the bottom of. Up next, Bloomberg Brief, plenty more to come, and this is Bloomberg.